On News9 Plus, news is now content. Subscribe and get free vouchers.
Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. In this show, we'll bring you everything from the world of business, politics, economy, and more importantly, stock markets. On the show today, we'll be joined by Santosh Meena and Kranti Bhatini. Keep watching. You are watching Morning Brief at 9. I'm Shweta Kothari. Our headlines this morning. India's employment jumps 36% under Modi government, adding 17.2 crore jobs since 2014, claims the Labour Ministry. And Finance Minister Nirmala Sitharaman holds pre-budget meetings with financial sector leaders and experts to shape 2025 economic plan. And Rupee hits another record low of 85.76 against the dollar, despite RBI's intervention and state-run banks selling dollars to curb depreciation. And Sebi dismisses settlement application by Zee Entertainment and executives, refers the matter for further investigation into alleged irregularity and violations. And Sebi debars Ketan Parekh and Rohit Salgaocar and others from security market for alleged front-running of trades and orders worth 65.7 crore rupees in illegal games. Karnataka announces 15% bus fare hike from 4th of January, first increase since 2020, affecting all government-run bus service across the 4 Karnataka Transport Corporation. Blinkit strengthens its quick commerce offering with the launch of 10-minute ambulance service for faster emergency response. You're watching Morning Brief. Our top story at this hour, the Indian rupee continues its downward trajectory on Thursday, hitting a record low of 85.76 against the dollar as of Thursday, surpassing its previous closing of 85.65. In an effort to stabilize the currency, the Reserve Bank of India intervened by selling dollar at 85.78, momentarily strengthening the rupee to 85.67 during afternoon trade. However, the rupee weakened further, closing at a new low yesterday. Traders reported state-run banks selling between $800 million to $1 billion to further control volatility. Despite these measures, analysts predict the rupee could fall further to 88.50 per dollar by December, which it has by December due to declining foreign investments and weak exports. It is expected to be a year where rupee is going to remain low. In fact, it is predicted that rupee will enter 88.50 against the dollar by December of 2025. Kranti Bhatini joining us this morning. Kranti, good morning. Very happy New Year to you. I want to begin by asking, what are you making about the volatility in rupee? RBI is trying its best to control the volatility, but despite that, rupee continues to weaken. Now, there is a debate on whether it's good or bad for the Indian economy. Your thoughts?
Shweta, good morning to you and a very, very happy New Year to you and all your team at News9. And the rupee has been depreciating in the past 3 months and now currently at all-time high levels, breaching in fact 85.50 levels also. What we can sense the reason for this kind of consistent the depreciation in the rupee is the kind of FPI outflows what we witnessed in the past fortnight has been creating some kind of extra pressure uh, on the rupee. But in fact, some extent, it is good for the exporters. But as an economy, we need to have a strong rupee going ahead. But yeah, it's a kind of a knee-jerk reaction in the medium to short term because of the perceived and consistent outflows from the emerging markets, and also dollar has been getting strengthened across all the emerging market countries. It's not the only rupee got depreciated in the past 1 year or 6 months, if you see, but the dollar has been appreciated among all the currencies across the emerging market. In fact, if I have to compare the relative performance of the rupee has been done extremely good when compared to the other countries, like if you have to compare with the yen and also the other BRIC countries are concerned, the rupee has been showing its strength. But it is at an all-time low level at this point of time. But after the new after the Trump got elected, some kind of dollar strengthening, what we witnessed in the medium term. But two reasons I can pursue at this point of time. One is the sustained outflow of foreign portfolio money, and also the dollar getting strengthened across all the emerging market companies. These are the reasons. If the persistent FPI flows remains continued in the next coming weeks also, we can expect some kind of further weakness. Or else, if the FPI turns positive and if the FPI inflows improves, we can see some kind of consolidation in the near to short term. So currently, I can say it's at an inflection point.
Rupee at an inflection point, but before we move on, are you expecting the FPI flows to really come in favor of India going into 2025? What's your outlook there as far as foreign portfolios is concerned?
As for the foreign portfolio investors are concerned, we are quite optimistic as we resume our growth territory. The first half of the year has been some kind of slowdown in terms of the pace of growth is concerned. But what we witnessed in the 2024, nearly for a tune of more than $60 billion of foreign portfolio money has exited from Indian markets. But thanks to the retail flows and also the domestic institutional investor flows, we could be able to absorb this kind of selling. But coming to 25, as the growth shift, the pace of growth improves in the year, there are some FPIs which are long only India funds. They have been waiting to enter into Indian market. So we can see some kind of improvement, most probably from the second half of the year. But it's early to say, but definitely in 2025, they're going to turn positive towards Indian markets.
All right, some sort of positivity expected there towards the end of, or the second half rather, of 2025. But another story which is now coming to light, given that this is the time around budget. Now, India's Finance Minister Nirmala Sitharaman on Thursday met with stakeholders from financial sector and capital markets for a crucial pre-budget consultation session. The meeting, aimed at gathering inputs ahead of the upcoming national budget, also saw participation of key officials including Finance Secretary and Secretaries of Department of Economic Affairs, Financial Services, as well as Chief Economic Advisors of the government. Remember, as a part of the annual process, the Finance Ministry regularly holds consultation with industry experts, economists and state officials, as well as leaders to inform the formulation of the budget, to really know what the expectations are. Some are included, some are not included, some are met. That's obviously the way budgets are made. But Kranti Batini is here, so let's quickly understand what are the market expectations. What is the financial market expecting? I think, on the back of our hand, I think there are a few expectations that all of us can really talk about, and that is some sort of turnaround as far as financial markets is concerned. I want to know from you, does India as an emerging market today looking as lucrative as it was in 2024, Kranti? And if not, what can the budget really do about it?
Shweta, see, is the usual regular process of any finance minister to meet the departments and also the industry body to understand their expectations from the budget. And the one thing we need to ponder upon is the last budget, which was announced after the post-election was the interim budget. For the current government, this is the first full-fledged budget what the finance minister is going to present for the entire financial year is concerned. So there are obviously there are some kind of expectations, high expectations from this budget. So the expectations on this budget is very high. And what we witnessed in 2024 was some kind of slowdown of growth in the first half of the year. We had the general election and also some kind of erratic monsoon, and which has clearly impacted the growth, and also the capex is at a very slower pace. If you see the first half of the year, the government could able to see achieving 65% of the capex as per the budgeted capex is concerned. So the pace of capex has been at a very slow pace, and we can see some kind of softening of the domestic consumption, and also the GDP is concerned. Coming to the financial markets, the stock market, expectations from the budget is very high. We need to see how the capex is going to go up, and also what kind of reforms. Okay, the pace of reforms, the expectation is very high. And also the other hand is the parliament is pursuing, the government is pursuing one nation, one election. So if that going to get finalized, so the tenure of the government might be very short. So every budget from here onwards, it is extremely crucial. So the pace of the growth is extremely crucial, and also meeting the expectation. We are still getting the feelers on increasing the domestic consumption, reduction of some kind of income tax, and also with the Trump at White House right now, he is going to give some kind of most relaxing incentives to the industry. So as an emerging nation and as a nation, currently India is focusing to improve the domestic growth and attracting India as one of the major hub for the manufacturing. Right now, the kind of incentives what the new administration in US has announced to attract the investments back in US, okay, we need to match that pace in terms of the incentivization and also in terms of the taxation is concerned. And while coming to the taxes of capital market investing is concerned, there should be some kind of rationally expectation. That's what the market has been anticipation, because we do have so many taxes in terms of investing in India is concerned. One is the short-term capital gain and also long-term capital gain. The parity has to be, market has been anticipating, where the long-term has been increased to, short-term has been increased to 15% in the previous budget. So some kind of announcement, the parity, the market is anticipating, and also any kind of, there is a long pending expectation from the budget that is about STT, the security transaction charge. So there are too many charges, security transaction charges, stamp duties, and also the GST. So many of the taxes are there. So is there any kind of rationalization? This is the expectation from the capital markets with respect to the taxation is concerned. Of course, obviously, the reform agenda and the capex always there from this budget.
All right.
So we need to wait and watch the expectation. Even the recovery in the market currently is one of the reason is the expectation of the budget is very much high right now. That is one reason for this kind of recovery in the market also.
All right.
So whether it's the pre-market, pre-budget rally or not, we need to see.
Okay, we'll need to see whether it's pre-budget or not. But stay on with us, Kranti. Another important story which is now coming out is from our Labour Ministry. Now, Labour Minister Mansukh Mandaviya stated that employment in India saw a remarkable 36% increase, rising from 47.2 crore in 2014-15 to 64.3 crore in 23-24. The minister credited the improvement in job creation to policies of the Modi government, contrasting it with UPA government's performance. Now, Mandaviya highlighted that under UPA administration, employment growth was a modest 7% over a decade, adding only 2.9 crore jobs. In comparison, the Modi government reportedly created 17.2 crore jobs between 2014 and 24. The Labour Minister also pointed out that agriculture sector employment has also declined by 16%, had declined by 16% under the UPA government, whereas under the current government, it has seen an increase of 19%. Whether those numbers will persist, sustain, we don't know. But let's take a view of Kranti Batini. Kranti, I think one of the conversations obviously in 2025 will also be how investment cycle has slowed down. Corporate earnings are not looking very good as far as second quarter is concerned, not looking very good for the third quarter also. That is what analysts are predicting at the moment. Capex cycle has also slowed down. All of these factors are not going to augur really well for the job market.
Yeah, some kind of softness in the economy, what we witnessed in the first half of the year. Of course, general election and also the erratic monsoons were the one reason for some kind of slowdown in the growth. And as you rightly mentioned, the capex has been very smooth, and there is government would able to spend the budgeted allocation in the first half of the year. But comparatively, what we can sense at this point of time is the Q3 can be a better quarter comparatively with the Q1 or Q2. So that's what our anticipation is at this point of time. As for the job data is concerned, Shweta, this has to get sustained. That is crucial for the markets and also crucial for the economy. One thing is, in the initial phase of this, the Atmanirbhar Bharat and also Make in India, it was at a slower pace. But right now, the momentum has been, what we are witnessing is, it is picking up, which is creating the good number of the employment data, what we are witnessing. And also, the technology-driven jobs, okay, the new entrants in the recent past, okay, they are also providing some kind of a employment at the bottom of the pyramid. So, by and large, what we can sense at this point of time is, okay, whether the data has been good, very quite encouraging, but the other data, what we need to look at is, okay, what kind of the wage growth, that's what we are witnessing, that's also important, and also the suitable employment. Okay, if there is a improvement in the bottom of the pyramid, that's good, but the suitable employment also, the skilled sets also need to be employed. It's a regular process, Shweta. We cannot argue, or we cannot interpret these numbers at a single number, because as a young nation and also as a larger nation, this data has to be interpreted in a very micro way. But by and large, it's a good number, and if these numbers could able to sustain and move further, okay, it will definitely add the improve the domestic consumption is concerned, because we also witness some kind of the pace of consumption also slow growth. That has to get improved with this set of numbers what we are expecting. If the numbers are sustained and move further, that's positive for the markets as a whole.
All right. Well, there'll be all eyes on what the budget brings in by the way of perhaps more capex. And not just that, I think given that last year and 2024 was largely an election year, maybe that's one of the reasons why capex spending was slower. Perhaps 2025 will be a turnaround. We'll have to wait and watch. Kranti Batini, always a pleasure. Thank you very much for joining us.
Thank you, Shweta. Always my pleasure to share my views with you and with all the viewers of News9.
Right, moving on now. The Securities and Exchange Board of India, Sebi, on Thursday rejected a settlement application filed by Zee Entertainment and Enterprise and its Chief Executive Officer Puneet Goenka in the alleged violation of the listing obligation and disclosure requirement regulations. The market regulator also broadened the scope of investigation involving the media firm's former chairperson Subhash Chandra and father of Puneet Goenka. In its adjudication order, it pointed out that Zee and Goenka had filed a settlement application for alleged violation of LODR regulations. Now, Sebi issued a show cause notice, remember, in the matter back in July of 2022. Sebi said that the allegations in the show cause notice dated 6th of July 2022 will be subsumed with the findings of further investigation carried out by Sebi in the instant matter. Accordingly, the content of the show cause notice, including the examination report and all relied documents, will be treated as integral part of a further investigation that Sebi will carry out as far as the matter of Zee Entertainment is concerned. Now, Zee Entertainment shares are down 10% in the past month and 18% in the past 6 months. We will be discussing the outlook on Zee Entertainment shares in the next segment. But moving on now. The market regulator has unearthed an unusual front-running scam involving Ketan Parekh and a stock market operator who, remember, was earlier imprisoned and then debarred from securities market for good 14 years for his role in the scam of 2000, and also a Singapore-based trader, Rohit Salgaocar. Now, in an interim order issued on 2nd of January, the Securities and Exchange Board of India detailed the investigation that spanned over 20 locations and impounded unlawful gains of 65.7 crore rupees. The order was passed against 22 entities by Sebi. The whole operation and investigation was novel for the information flow and how Ketan Parekh used his earlier network in Kolkata for front-running trades and how main players were operating outside the regulatory ambit. The Sebi investigation found that Ketan Parekh was executing non-public information-based trades through accounts of 6 front-runners, and the Sebi showed a diagrammatic representation of the information flow from Ketan Parekh to some of those front-runners for execution through their trading accounts, resulting in unlawful gains of over 60 crore rupees. And the Karnataka government has announced a 15% hike in bus fares across 4 states transport corporations. So all 4 state transport corporations, including Karnataka State Road Transport Corporation, Kalyana Karnataka Road Transport Corporation, the Northwestern Karnataka Road Transport Corporation, and the Bengaluru Metropolitan Transport Corporation from 5th of January onward. The revision is expected to generate an additional revenue of 7 crore rupees per day for cash-strapped corporations. The fare hike comes amid state flagship Shakti scheme, which provides free bus travel for women on state-run buses. Remember, this scheme announced in June costs the government approximately 417 crore rupees per month, and the 15% fare hike is set to partially offset the scheme's financial burden and has drawn criticism from commuters across Karnataka. And quick commerce platform Blinkit has launched a new service aimed at enhancing emergency medical access, introducing ambulance in 10 minutes offering. The service, which was unveiled on Thursday, begins with the deployment of 5 ambulances in Gurugram. Blinkit's CEO took to social media platform X to announce the initiative, stating that users will soon be able to book a basic life support ambulance directly from the app. The ambulances are fully equipped with essential life-saving equipment, including oxygen cylinders, stretchers, monitors, suction machine, and emergency medicines. Each ambulance will be staffed with a paramedic, an assistant, and a trained driver to provide immediate medical support during critical moments. And time for a short break now. Coming up next, Stocks in Focus with Santosh Meena after this very short break.
XEV9e, Mahindra Electric Origin SUVs.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9. I'm Shweta Kothari. Let's take a quick look at how market is opening after 2 consecutive days of gains. Markets opening on a flattish note today. Nifty 50 down by 0.08% at 24,168. Sensex also marginally down 0.1% at 79,841. Mid cap up nearly 0.25%, 0.35 at 58,310. Nifty small cap seeing gains there, up 0.5% at 19,188. India VIX, the volatility indicator, is also marginally up at 13.75. So it's a flattish opening for markets on the last trading day of the week. Let's quickly take a look at some of the stocks which are in focus this morning. Looks like a mix there with more red than green. Let's take a look at the finance and banking pack. HDFC Bank down 0.38%. ICICI Bank also down 0.62%. Kotak Mahindra Bank is also down. It's the SBI Bank which is standing out, showing some gains there in the morning at 0.85%. So it's a mix there as far as banking and financial pack is concerned. SBI Life also up. Moving now to the IT pack, mostly in red. TCS down 0.83%. Infosys down 0.81%. Tech Mahindra also down almost 0.5%. Energy and minerals there. Reliance stock is also down 0.5%. ONGC is up and substantially so, 3.28%. We'll try and understand the reason for that. As far as the auto pack is concerned, showing some signs of recovery there. M&M Mahindra and Mahindra is up 0.5%. Maruti Suzuki is up 0.74%. Tata Motors is also up 0.66%. Let's take a look at consumer non-durable sector. ITC down at least 1% this morning. Nestle India is up 0.71%. So it's a mix there as far as markets this morning is concerned. Let's quickly get in Santosh Meena in this conversation. Santosh, good morning. What are you making of markets today? Flattish opening this morning.
Yes, Shweta, good morning. So we have seen a strong rally in the market, especially yesterday. The year started on a very strong note. Actually, market was extremely oversold because the FII short positions in index futures stood at around 86%. In terms of context, it was around 237 context, means one of the highest level in 2024. But market was lacking any trigger for a short covering move. And monthly auto sales number in some of the quarterly updates led it short covering rally in the market, and we have seen buying by FIs after a long time. So market sentiment is very good because of weekly option expiry. The gain was extended in yesterday's trading session. So today we are seeing some cool off in early morning, but any dip around 24,050 to 100 zone will be a good buying opportunity, because yesterday Nifty managed to cross all its important moving averages, including 250 and even 20-day moving average. But it has to sustain above its 20-day moving average around 24,200 level. If Nifty managed to sustain above its 24,200 level, then we can expect a move towards 100-day moving average, which is placed around 24,600 level in coming days. So mood is good until and unless we manage to hold 200-day moving average of 23,900. The view will remain buy on dip. There will be sectoral rotation. Yesterday we have seen a good gain in auto stocks. Today could be a day of FMCG and some of the financial stocks. So there will be sectoral rotation in large cap names, but the overall structure will remain bullish in the near term, as long as Nifty trades above its 200-day moving average of 23,900 level.
All right, overall sentiment remains bullish. There will be some sort of sectoral rotation, but I want to talk about some of these stocks which are in news specifically. Let's begin, Santosh, with Zee Entertainment. Shares of Zee Entertainment will be in spotlight today as Sebi rejected the settlement application filed by the company and Puneet Goenka. Sebi also dropped earlier show cause notices against Zee, Subhash Chandra, Puneet Goenka, merging them into a broader ongoing investigation into the alleged irregularities and violations. How will this move impact the stock of Zee, which has largely been down this year and last year?
Yes, overall structure is bearish, but there are some signs that worst is behind us. We can expect a upside in this counter from current level. And today we are seeing a good gain in this counter around 6%. It is higher. So yes, a bottom has been placed around the 125 kind of level. So keep a stop loss of 120 for a positional view. On immediate basis, we can expect a rally towards 150 kind of level. And if it manages to sustain above 150, the overall targets comes around 180 level. So the stock is risky, so only aggressive investors, their risk taking capacity is higher, can take position in this counter. Otherwise, there are multiple options in the market. Better to avoid this counter. And if you are aggressive, then you can buy this counter at current level with a stop loss of 120.
All right, that's the word coming in, to avoid that counter. Very surprisingly there, although the stock bottomed out last year, it is, coming back positive up. Has it bottomed out really? Because it's coming back up despite that negative news from Sebi.
Yes, market wants that Goenka family completely come out of this group, and market want a clean trade. So there are some signs that the market is predicting that this Goenka family will be out of the board, and there will be some kind of turnaround in this counter, because there's good value in this counter at current level. So risk reward is favorable, but there are multiple issues in this counter, so only aggressive traders can bet on it. Yes, some signs that it has bottomed out, but it has to sustain above 125 kind of level. Then we can expect a move towards 150 level on immediate basis.
All right, and the stock is down about 13% in the last 6 months. Shifting focus now to Avenue Supermarts, the operator of D-Mart retail chain, which reported a 17.5% rise in standalone revenue from operations for third quarter financial year 25, reaching 565 crore rupees. Now, this marks solid growth for the quarter ending 31st of December as far as D-Mart is concerned, reflecting strong consumer demand and operational performance. Santosh, the counter has fallen over 24% in the past 6 months, but we've seen some recovery in the last week. What's your take on Avenue Supermarkets?
Yes, the stock is placed with a 10% upper circuit after strong quarterly updates, because in last quarter we have seen massive pain in this counter because revenue growth was sluggish. But yes, there are some signs the worst is behind us. Then we can expect a recovery in this counter. On immediate basis, the gain may extend further, and it will likely to fill the gap it has created in last quarterly results around 46,050 level. So there is more upside of 500 in this counter around 4600 level. We may see some profit booking, but yes, it has bottomed out and worst is behind us. But after 10% gain, you can chase this counter on positional basis for the target of 4650 and keep a stop loss of below 4000 level, because there are some signs that we may see extension of this gain in coming days.
All right. In fact, the stock is up about 14% on the back of those quarterly numbers. So the market's, of course, reacting well to the Q3 profit as far as Avenue Supermarts is concerned. But shifting focus now to Hero MotoCorp, which reported a 14% decline in total sales for the month of December, recording 3.24 lakh units. Domestic sales also fell sharply by 22% year on year, raising concerns about the demand challenges. This performance could put pressure on the company's stock in the near term. I want to understand from you, Santosh, will Hero MotoCorp shares extend their 30% fall from the peak after underwhelming December sales?
Yes, if you look at the auto sales numbers, then two-wheeler, especially like Hero and Bajaj Auto, even TVS Motor disappointed. Eicher Motor did very well. We saw a strong growth in Royal Enfield number. But yes, this is the problem point, rural area. So, but I think market knows this thing, because the stock is currently trading around the support of 4,000. So until and unless it doesn't break 4,000 level, we can expect a recovery. Yes, the outperforming stocks will remain like Eicher Motor and passenger vehicle stocks like M&M, Maruti. They may see some kind of recovery, but you should stick with the outperforming stocks name. And if you are holding Hero MotoCorp, keep a stop loss of 4,000. We can expect a recovery towards 4,600, 4,800 level. And market will look for the budget. If you will see any kind of announcement, especially on income tax front or even for the rural area, then we can expect a pre-budget move in this counter.
All right, there could be some sort of pre-budget move in this counter. The stock, remember, has been down about 25% in the past 6 months, mainly on the back of the fact that there has been a sluggish demand, at least in the rural economy. But shifting focus now to Bharti Airtel, which has announced its agreement to acquire a 26% equity stake in AMP Energy Green 3 for 37.89 crore rupees. Now, AMP Energy is a special purpose vehicle established to own and operate a captive power plant, highlighting Airtel's commitment to sustainable energy solution. Now, Santosh, over last 1 year, Bharti Airtel has delivered a return in excess of 50%. Do you expect the strong run to continue?
Yes, the overall structure is extremely bullish, but for timing, it has entered into some kind of consolidation phase. So we can expect some period of more consolidation around this level of 1600 level. We can expect a consolidation range of 1600 to 1700. Once it will cross 1700 level, then the momentum will resume towards kind of 2000 level. But for timing, it may see some kind of consolidation in the range of 1600 to 1700. If you are an investor, hold this stock. If you are a trader, better to avoid this stock until it trades in the range.
All right. That's the view coming in. Looking at the stock, has delivered about 12% returns in the past 6 months. Year to date, marginally higher, but today is down about 0.8%. Let's move on to Varun Beverages now. Varun Beverages has announced an investment of 412 crore rupees in its South African subsidiary, a beverage company proprietary Bevco. Now, Bevco manufactures and distributes PepsiCo licensed products and its own non-alcoholic beverage brands in South Africa, signaling Varun Beverages' commitment to expanding its footprint in the region. Now, Varun Beverages has been one of the best performing large cap stocks over the past few years. Santosh, however, in the last 6 months, it has not done much for the investors. Do you think it's now ready for an up move?
Yes, Shweta, you rightly pointed out that it is one of the biggest multi-bagger stock in history. And currently, for even entire 2024, it remained in a range. On the upside, it failed to cross around the 680, 660 level. On the downside, even 560, 550 level acted as support level. So there is a range of 550 to 650. So it has to sustain about this 650, 700 zone. Then we can expect resume this momentum. But for timing, I think it may spend more time in this range, so better to avoid to chase this counter in the range of 660 to 680 if you are a trader. If you are an investor, so stick with this counter. Once it will cross this 680 700 zone, it will resume its uptrend towards 800, even 1000 levels can be seen in coming days or months. But for timing, if you are a trader, better to avoid.
All right, and let's shift focus now to Indian Railway Finance Corporation. The IRFC has signed now an MOU with REMC to finance renewable energy projects supplying power to Indian Railways. The partnership will also explore financing options for thermal, nuclear and renewable energy projects under captive model, aligning with India's push for sustainable infrastructure. What are the key levels at which one should track, Santosh, IRFC?
Yes, structure is looking interesting because the counter is making higher lows. If you look at the lows, in the month of October, it made a low around 133 level. Then in the month of November, it made a low around 136. And in December, the low was around 147. So structure is looking bullish, but it has to gain momentum. On the upside, we can expect a move towards 166, 167 level. Once it will cross this 167 level, then we can expect a move towards 200 level. So risk reward is favorable. You can keep a stop loss of December month low around 146 and buy this counter, even hold this counter for an immediate target of 167. And once it will cross 167 level, then we can expect a move towards 200 level.
All right. That is as far as Indian Railway Finance Corporation is concerned. It's up about 2% this morning. Santosh Meena, thank you very much for taking time out. Thank you for joining us here on News9. And time for a short break now. We'll be back with more stories on the other side. Keep watching Morning Brief at 9.
limit love. B6 Mahindra Electric Origin SUVs.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Welcome back. In a shocking revelation, the US President Joe Biden stated on Thursday that the suspect behind the tragic New Year's Day truck attack in New Orleans, which left 15 people dead, pledged allegiance to the Islamic State. The president shared that intelligence briefings confirmed that the attacker, a US Army veteran, acted alone. Authorities are continuing their investigation into the incident as the nation mourns the loss of lives.
Today, the FBI briefed me that as of now, we have no information that anyone else is involved in the attack. They've established that the attacker is the same person who planted the explosives in those ice coolers in 2 nearby locations in the French Quarter. As I said yesterday, the attacker posted several videos just several hours before the attack, indicating his strong support for ISIS. Federal law enforcement and the intelligence community are actively investigating any foreign or domestic contacts and connections that could possibly be relevant to the attack. We're going to continue to relentlessly pursue ISIS and other terrorist organizations where they are, and they'll find no safe harbor here. I'll continue to provide updates in New Orleans and Las Vegas as the facts develop.
And shifting focus to Tesla Cybertruck explosion outside Trump International Hotel in Las Vegas on New Year's Day. The law enforcement officials have now identified, remember, a U.S. Army soldier as the likely individual behind the attack. Authorities believe that 37-year-old Matthew, an active duty soldier from Colorado Springs, acted alone. Tragically, the explosion left the driver dead and injured 7 others with minor injuries reported. Investigators revealed that the individual inside the vehicle had sustained a self-inflicting gunshot wound just before detonating explosive. The FBI stated that there is no definitive link between this incident and the New Year's Day truck attack in New Orleans, which claimed 15 lives. DNA test is underway to confirm the identity of the body, which was severely burned. And a fresh health crisis now looms large in China, this time involving an outbreak of a human metapneumonia virus, HMPV, just 5 years after COVID-19 pandemic. Now, reports and viral social media posts suggest that virus is spreading rapidly, with claims that hospitals and crematories are overwhelmed with dead bodies. Videos circulating on social media show overcrowded hospitals, with users alleging simultaneous circulation of multiple viruses, including influenza A, HMPV, mycoplasma pneumonia, and even COVID-19. While there are rumors of a state of emergency being declared, officials have yet to confirm it. Remember, HMPV, known to cause flu-like symptoms, is under close observation by health authorities in China. And Wall Street experienced a volatile session on Thursday, closing lower amid choppy trading conditions. Investors embarked on the new year facing the cross-currents of a solid labor market data, a rising dollar, and tumbling Tesla shares.
U.S. stocks finished lower on the first trading day of the year after opening the session higher. Investors started 2025 dealing with the cross-currents of solid labor market data, a rising dollar, and tumbling Tesla shares. The Dow slipped 1/3 of 1%, while the S&P 500 and the Nasdaq fell a little less than that. Shares of Tesla lost 6% after the company reported its first annual drop in deliveries, as incentives failed to stem a decline in demand for its aging lineup of electric vehicles. While a report from the Labor Department showed initial and continuing claims for unemployment benefits both fell last week. That supports the narrative of a solid jobs market and adds weight to the possibility that the Federal Reserve could let its key interest rates stand at this month's policy meeting. Baird investment strategist Ross Mayfield says he expects to see some volatility in stocks, but thinks it's full speed ahead.
I think we're still in a bull market here. I would say that any pullback based on something like the 10-year or something like the dollar strengthening is buyable, right? A pullback is buyable because the fundamentals of the economy are solid. The consumer keeps spending. Third quarter GDP was strong. Fourth quarter GDP is tracking strong. Initial jobless claims, have been forgotten, but they came in this morning extremely low. So you have a solid labor market, a strong consumer. You also have corporate profits expected to rise double-digit percentage points, and not just the Magnificent Seven, but the other 493 as well. So you have this really solid fundamental backdrop.
Other stocks on the move included Apple, which dropped about 2.5% after the iPhone maker offered rare discounts in China in order to compete against domestic rivals. And SoFi Technologies plunged 8% after broker KBW downgraded its stock on valuation concerns.
In a sign of continued job security, the number of Americans applying for unemployment benefits dropped last week to its lowest level since March of 2024. According to Labor Department, joblessness and claims fell by 9,000 to around 2 lakh. The 4-week average, which smooths out fluctuations, also saw a decline of 3,500 to 2,23,250. Additionally, the total number of people receiving unemployment benefits also dropped by 52,000 to 1.84 million. And Tesla has now reported its first ever annual decline in vehicle deliveries, with automaker falling short of expectation in the fourth quarter. Despite offering incentives, demand for Tesla's aging lineup of electric vehicles failed to pick up, contributing to the drop in deliveries. This marks a major shift for the company, which has seen years of growth in its vehicle sales.
Shares of Tesla fell more than 7% Thursday morning after it reported its first decline in annual deliveries. It handed over 1.79 million electric vehicles in 2024, down 1% from 2023 and below the 1% gain predicted by analysts. Incentives failed to boost demand for its aging lineup of models. CEO Elon Musk expected promotions, including zero interest rate financing, to power a slight growth in deliveries in 2024. Reduced European subsidies, a shift in the U.S. toward lower-priced hybrid vehicles, and tougher competition from China's BYD have pressured Tesla. In response, Musk pivoted Tesla to self-driving taxis and backed President-elect Donald Trump with millions of dollars in campaign donations in hopes that it could bring regulatory relief for the company. Deliveries in the fourth quarter also dropped. With self-driving technology still years away, analysts have said Tesla will have to rely on cheaper versions of current cars and the Cybertruck to drive sales growth in the near term. The truck, known for its trapezoidal stainless steel exterior, has been showing signs of demand weakness, analysts have said. Tesla's shares surged 62% last year.
And in an effort to defend its market share in China, Apple is offering rare discounts of up to $68.5 on its latest iPhone models. The price cut comes as Apple faces increasing competition from domestic tech giants, which has been expanding its presence in the smartphone market.
Apple is making moves to defend its market share in China's mobile phone market as it battles rising competition from domestic rivals like Huawei. The US tech giant is offering rare discounts of up to $68.50 on its latest iPhone models in China. The 4-day promotion, running from January the 4th to the 7th, applies to several iPhone models when purchased using specific payment methods. The flagship iPhone 16 Pro and iPhone 16 Pro Max will see the highest discounts. But consumers remain cautious about spending amid China's slowing economy and deflationary pressures. Apple is grappling with declining market share in China, which is the world's largest smartphone market. Local manufacturers have intensified competition. Huawei has emerged a strong challenger since its return to the premium segment in 2023 with locally made chipsets. It also cut the prices of a variety of high-end devices over the weekend on one of China's leading e-commerce platforms. Apple briefly fell out of China's top 5 smartphone vendors in the second quarter of 2024 before recovering in the third quarter. The US company's smartphone sales in China still slipped 0.3% during the third quarter from a year earlier. Huawei's sales surged a reported 42%.
And Norway has made major strides in its push towards an all-electric vehicle future, with registration data revealing that 9 out of 10 cars sold in the country last year were powered entirely by batteries. As the country leads the charge in clean transportation, it sets a strong example for others aiming to reduce carbon emissions and move towards a greener future.
9 out of 10 new cars sold in Norway last year were powered by battery only. It's now within touching distance of its target of only adding electric cars to the road by 2025. Top-selling brands were Tesla, followed by Volkswagen and Toyota. Oil-producing Norway penalises petrol and diesel cars with high taxes and exempts EVs from import and value-added taxes to make them more attractive. Experts say the policy has worked because it's been consistent over time, maintained by governments of various political persuasion. Also helped is the fact that Norway does not have an automaker lobby. Christina Bu is head of Norway's EV Association.
In other countries, you see that someone put in some incentives or some tax exemptions, and then they pull them back again. To do this and to sort of succeed with this, you need to sort of keep at it for a long enough time, and it's working. And I think the recipe that Norway has used, it's definitely transferable to other countries as well.
The European Union has decided to ban sales of carbon dioxide emitting cars by 2035, but it may allow sales of cars that run on fuels made from captured CO2. Norway's policies mean that fully electric cars last year overtook pure petrol cars on Norwegian roads. They accounted for more than 28% of all cars driven in the Nordic country as of December. But the rising share of EVs on Norwegian roads mean other sectors have to adapt. At fuel stations, more and more petrol pumps are being replaced with fast electric chargers. And for drivers, switching to an EV means it can take a little longer to charge a car in winter due to the cold weather.
And that's all from me on Morning Brief at 9. News and updates will continue on the other side. Keep watching News9.
He said, Thomas, if it were not for my grandmother, who was my light of my life, I would have stayed back in the US and married the girl who I loved and I wanted to marry. He said, 2 things brought me back to India. Number 1 is that my grandmother, who meant everything to me, she took ill. And the other half was that grandmother used to always tell him, please understand, Tata stand for certain principles and normative values. At some point of time in your career, you will have to embrace it unfailingly and ensure that there is no deviation from the path which Jamshedji, the founder, had shown for the entire Tata family.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
India's neighborhood has been in turbulence all throughout.
Sheikh Hasina was forced to resign and take refuge in India.
Myanmar itself is facing an enormous internal crisis of sorts.
Periods of India's greatest strength was when the neighborhood did not have a problem with it.
There are events that are larger than your ability to control them. What you have to do is to make the best of those events and move forward.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
The beauty is of leadership being able to acknowledge and flex and mold and inspire and get the best out of their people.
Unfortunately, there's no holy grail. There can be an organization that's the darling of the markets, doing well, delivering results.
If Shakespeare had been there, I think probably he would have written another tragic comedy.